Okay, let's just get right into it. Picture this. It's April 2026, and the entire financial world gets hit with a bombshell. SpaceX, the rocket company, files for the biggest IPO in history. And the valuation they're targeting? An absolutely staggering $1.75 trillion. A number so huge it just doesn't seem real. So that brings us to the big puzzle we're going to solve today. How on earth can a company that basically just launches rockets be worth more than a giant like Meta or even Amazon? I mean, if you're only looking at the rockets, the math just doesn't add up, not even close. And let's be super clear about these numbers because they are just insane. SpaceX filed to raise $75 billion in cash. Now, to really get how massive that is, you have to realize that this single fundraising goal is more than 2.5 times the previous world record. This chart really puts it into perspective. The old record holder, the state-owned oil titan Saudi Aramco, raised just under $30 billion. SpaceX isn't just squeaking by to beat the record. They are absolutely obliterating it. This isn't just the next step up, it's a whole different league. Okay, and this is where the story starts to get really weird. If you try to value SpaceX like a normal aerospace company, a Boeing or something, the whole thing just falls apart. Those guys trade at maybe 10, 15 times their yearly revenue. SpaceX is asking for an 87x multiple. That means they want to be valued at 87 times their annual revenue. So what gives? Well, it means we're not looking at this thing the right way at all. Right. To understand that insane 87x number, you have to completely change how you think about SpaceX. You have to stop seeing it as a company that builds one thing and start seeing it for what it is, a container for a bunch of separate, massive industries. It's an ecosystem. And there's actually a financial term for this. It's called a sum of parts valuation. And it's pretty simple, really. Instead of trying to value the entire company at once, you break it down. You figure out what each individual business inside the company is worth all by itself, and then you just add them all up. And this image here explains the idea perfectly. Over on the left, you've got a traditional company. Think of it like a single factory, valued on the money it brings in. But on the right, that's SpaceX. Investors aren't being asked to buy a rocket factory. They're being asked to buy a piece of a holding company that owns a rocket business and an AI lab and a global internet company. So let's actually break it down. Here's the architecture of that $1.75 trillion machine. A whopping 60% of that value comes from Starlink, their satellite internet service. 20% from their AI lab, XAI. And get this, only 15% comes from launch services, the actual rockets. And then there's a little 5% slice for X, the social media platform. So that breakdown instantly tells you where the real engine is. The whole story, the whole justification for this IPO, it all comes down to Starlink. But that just raises another, even bigger question. Just look at that number, $1.2 trillion. That is the price tag they're putting on Starlink alone. To put that into perspective, that one single division is being valued at more than all of Meta. The entire investment case for the biggest IPO in history, it rests on this one business. Which leads us to the next mystery. The global telecom industry is a bloodbath. It's a graveyard littered with failed companies. It's brutally competitive. So how did Starlink not only survive, but get 10 million users so fast and build a trillion-dollar business without anyone just copying them or crushing them? The answer? They didn't just build a business. They built a fortress, an orbital defense system. In the world of business, we call this an economic moat. And let me tell you, Starlink's might be the deepest one ever dug. And the idea is pretty simple. An economic moat is just a competitive advantage that's so strong it protects your company from rivals, just like a real moat filled with water protected a castle from attackers. It makes it incredibly hard, sometimes flat out impossible, for anyone else to come in and steal your business. So what does this fortress look like? Well, it's built on 3 massive, almost unbreachable walls. These aren't just little advantages, they are structural barriers that all work together to lock out anyone who even thinks about competing. First up, you have the capital barrier. To even think about building your own Starlink, you'd need somewhere between $50 and $80 billion in cash upfront. Then there's the time barrier. Even if you had all the money in the world, it would still take you 5 to 7 years minimum just to build and launch everything. And finally, the ultimate unfair advantage, vertical integration. Any rival has to pay someone else a ton of money to launch their satellites.
But SpaceX is the launch company. They launch their own satellites for basically nothing, a structural advantage no other company on Earth can match.
And this table just lays it all out. It's not even a competition. You can call it a competitive chasm. Whether you're talking about launch cost, global coverage, or just how long it takes to get to market, Starlink has this fundamental built-in advantage over everyone. They are fighting a war that, mathematically, they lost 5 years ago. So here's the big takeaway. When you combine that sum-of-parts structure with an economic moat that's this deep, you don't just get a valuable company. You get a completely new set of rules for how industries are built and dominated. You see, this isn't just a collection of different companies taped together. The real moat is the ecosystem itself. It's a flywheel. The cheap rockets launch the internet service. The internet connects the AI. The AI makes the hardware and the rockets smarter. Each part makes all the other parts stronger and more valuable. It's a self-reinforcing loop. It's the world's first fully integrated orbital intelligence platform. At the end of the day, this IPO is a massive bet. It's a bet that the most valuable companies of the future won't be defined by making just one thing. They'll be valued based on their ability to synthesize hardware, software, transport, and intelligence into a single, unstoppable machine. So the real question isn't just whether SpaceX is worth $1.75 trillion, it's what this new playbook means for everybody else.